Market Prospects, delivering timely information and education to prairie farmers for over 25 years. Market Prospects is brought to you by the University of Saskatchewan's Department of Bioresource Policy, Business and Economics, and these sponsors. Log on to marketprospects.usask.ca to view past programs and for information on upcoming programs.
On Market Prospects this week, we focus on the barley and oat situation and outlook. Joining us from Edmonton is Charlie Pearson, Provincial Crops Market Analyst with Alberta Agriculture and Rural Development. Hello and welcome, Mr. Pearson.
Hello.
So what's been happening with supply, demand and movement of Western Canadian feed and malt barley this year, and what do you expect for the rest of the current crop year?
Well, I guess the big story this year has just been the big size of the overall crop, and barley is no different than other crops. Carry-in was a little bit smaller at the beginning. They were 1 million tons, but then we had our 10 million tons worth of Canadian barley production, total supplies of about 11 million tons. So that's bigger than what we've seen for about the last 3 years or so. About on the export side, exports have been slower than normal, and that reflects, I guess, a lot of what's happening in the transportation system. Barley is no different than other crops. Looking at the feed side, I think we're going to see feed consumption up a little bit this year than we've seen from other years. Better feeding margins in the livestock industry, probably a few more animals fed here at home. But having said that, still not going to be enough to consume all of that crop that's out there. Looking at carryover, probably about 2.5 million metric tons next summer, and that's 2.5 times what we saw in July 31st of 2013. Looking more specifically at prices, prices have actually shot up a little bit through the winter time. Lethbridge prices are about $175 a ton right now. That's up from about $155 a ton, and that's kind of a reflection of the cold temperatures, both on feed consumption and I guess the ability to move barley around. I think those prices will stay up fairly well through the next little while here, at least through road band season, spring seeding, but I think there's going to be some period as we get into the summer where we'll see some lower prices.
So what factors influence feed barley price differentials and the malt barley premium on the Canadian prairies?
Well, I guess if I look at the feed barley side, your highest prices are always where the feed consumption is. So Lethbridge traditionally has been the highest price market in Western Canada. That's changed a little bit as we've had some different other areas across both Saskatchewan and Alberta that are feeding more barley, but that's where it is there. The same thing on the malt side. The prices around a malt plant are generally a little bit higher than what you'll see as you get further out. The other factor, though, is access to Vancouver. The closer the barley is to Vancouver, both feed and malt, probably the higher the price that you're going to see.
What are your projections for Western Canadian barley acreage, production and prices for the 2014-2015 crop year?
I guess looking at acreage-wise, I expect acres to be down about 5% or so. Barley profitability relative to other crops is going to be on the low side, and I think that'll continue the trend to lower acres. If we look at things based on an average yield, we're probably looking at production of about 8.5 million metric tons. Total supplies next year of about 11 million metric tons. That's very similar to the current crop year as we look forward here. Looking at the price side of things more than anything else, and just carrying on from there, I'm going to quote prices, Lethbridge prices right now, and put some probabilities to it. My expectations, there's a pretty low probability of having Lethbridge feed barley prices of under $3 a bushel. That's about 10%. The most likely area is somewhere between that $3 and $4 per bushel area here. Again, I think it probably, in the Lethbridge terms, would be probably at the lower end of that range, but again, it's pretty equal probability. Looking at the $4 end of things, there is a probability that that could happen, but again, I think we would need some support from some type of a feed or a weather problem in some of the major producing areas. Looking more so at the malt barley end of things, we're seeing some current bids in that $4 to $4.50 area for production contracts, and depending on where you are across the prairies. A lot of those contracts are being taken up here right now. if I were to look at the probability of where prices are likely to be this year, that's probably a similar range to where I would see less than $4. I don't see a strong likelihood for that right now. In that $4 to $5 area, I think that's a pretty reasonable spot for malt barley prices as we go ahead here, particularly to a malt plants in your local community.
What's the current market situation for Western Canadian oats, and what do you see for the rest of this crop year? Also give us your projections for acreage, production, and prices in the upcoming crop year.
Okay, if you're looking at feed oats, they basically have been a follower of all the other feed grains, including barley. The story is kind of the same, record yields and a forecast large carryover at the end of the crop year. If we're looking probably at the story around milling oats and horse feed oats here in Alberta, the issues really have sorted themselves out around transportation. If we can highlight things in Saskatchewan, farmers will be aware. We've had a nice rally in Chicago Board of Trade oat futures prices to over $5 per bushel. I should highlight that that's on the nearby contract. Basically, it's a situation where Canadian oats aren't able to move into the U.S. because of transportation, and we've had quite a split in terms of the price differential here. I think what will happen over time is that these transportation issues will start to resolve themselves. So I think we have some narrowing of that spread between the U.S. market and the Canada market. But again, that's a bit of an outlier right now, and things will start to happen differently. If we look ahead to the new crop here, and starting probably in August the 1st, looking at oats, I don't think there's anything that says that oat acres will increase much over what we've seen in the last couple of years. Across the border. It's a situation where U.S. farmers compare oat profitability to other crops, and other crops are more profitable. So I don't see big increases. We've got continuing import demand from the U.S. then. If I divide the prairies in half, Alberta and eastern Saskatchewan, again, transportation issues and costs will get in there. So I don't see big increases in oat acres in there. So it's basically eastern Saskatchewan, Manitoba will be there in terms of increasing production or potential increases of production here.
Well, thank you again for your insights, Mr. Pearson, and for coming on Farmgate.
Thanks for the opportunity.
Okay, stay with us. We're back in 2 minutes.